We continue with our results analysis. Bandhan Bank reported a steep fall in its net profit by 88% from 100 to 112 crore from 937 crore last year, second quarter. Like many other banks, it has reported a fall in its margins. Only the margin fall is a little steeper here, falling from 6.8% in Q1, that is just last quarter, to 5.8% in Q2. The other worry is that its credit cost, which is the overall cost of making provisions for bad loans, this cost barely fell by 10 basis points to 3.4%. For many banks, especially PSU banks, it has fallen very sharply, both bad loans and the credit cost. Finally, the amount of loans or borrowers who have not paid interest in the first 30 days, what in banking jargon is called SMA 0. That amount has also risen. That's an indication of future bad loans to come. If you don't pay your interest, bang in the first month. So these are the worries that are clouding the stock. Of course, after a steep fall, the stock has now recovered a bit. But let's get to the management. Partha Pratim Sengupta, Managing Director and CEO at Bandhan Bank, joins us. Mr. Sengupta, good morning and thank you very much for joining us. You may have seen from the investor calls itself the kind of fears that is bedeviling the investor community. So let us start first with the GNPA. GNPA rising a bit was not something the market was prepared for. They were prepared for the already elevated GNPA. Where has it risen and do you see it falling?
So let me tell you that our bank, Bandhan Bank, has two distinct segments. One, we are in the microfinance, which we call EEB, and the other where we are now making a growth during the phase of transition. So last November, we have started Bandhan 2, where we are aiming towards a transition. And I have clearly indicated at all forums that definitely there will be a dip in the margin. But your question is now on the NPA.
Yeah, first NPA.
Yeah,
You'll come to the margin.
Yes. So the NPA, again, if you look at it, we could actually kept it stagnant at 5%. What was there? I don't know, but 9% and 9.6%. You are saying only the EEB book, I suppose. It is not the total bank book. Whatever you're reflecting on the screen is probably the EEB segment.
No. At the moment, we are reflecting the SMA book, but that's okay. I'm asking you about the GNPA.
So let
that
me
5%, what?
GNPA, yeah. So GNPA Q1 was also 5%. And Q2 is also 5%.
Yeah, but it's 5% of a larger book,
I'm just telling. Yeah. So I have again told you that there are two distinct segments.
Okay.
So if you look from the non-EB book, we are definitely in line with the industry. Whether it is retail, whether it is wholesale, whether it is the housing also for that year. So that is not that much elevated. It is more or less in line with the industry. If you take that portion, it will be around 2 to 2.2% around for the GNPA. But the pain that was coming from the EV segment, we expected that probably it would go down within Q1 or maximum in the first month of Q2. That has not happened and not happened in the entire EV industry. So while our performance, again, if you compare with the microfin industry, we are much better, whether it is in the NPA or even in the disbursement and other parameters. But definitely it has impacted the bank as a whole. So the gross slippages has mostly, so if my gross slippages is definitely elevated at almost 1,500 crores during the quarter, which was almost at the same level as Q1. But out of which almost 1,100 crores have been contributed by this segment alone. So this has, as I have shown on the screen also, I can say that the only green shoots in that, I am finding that SMA 1 and SMA 2 books are declining.
Yeah.
Particular segment. So which is giving an indication, and also I'm finding an indication that the quality is gradually improving. The second part is that the SMA 0, again, I have told you also previously and also to the investors, you see, we have a system which is also, again, a very unique to this bank. In this particular EV segment for that year, we go to the field and collect the amount. Now, during holidays, the demand is generated, which was not earlier there. Let me tell you that it was not earlier there. We have made this correction since February this year, in line with the IRAC circular of RBI. So the demand is generated on holidays, but my people are not there in the field to collect the amount. And during the festive season, my major EB areas, that is Bihar, Bengal, Assam, Northeast, and other the major areas for that, they had a consecutive holidays of 3 to 4 days. So definitely that has that is the reason for actually rising the SMS zero book. But I can tell you that till today, because yesterday also we did a homework and we found that almost 85% of it has already been collected.
Okay.
And I am pretty sure that the balance amount out there may be a little bit slippages, but most of the funds will be collected in these 2 days. So holiday impact will always be there whenever there are continuous holidays, especially at the quarter ending. It will impact my SMS zero that we have made very clear to the investors also.
Okay. Well, actually your overall net NPA has also risen a bit. Let me come to the gross NPA, sir. If you, I don't know if you have your own presentation in front of you. I'm looking at page number 17 or slide number 17, where you have the segmental NPA. In the segmental NPA, actually your wholesale banking NPA has gone up from 8.1 billion to 9.1 billion. Likewise, your housing NPA has gone up from 7.3 billion to 8.7 billion. That is what is worrying me. I agree with you that you have reduced your microfinance, what you call EEB book, and the rate of growth of the non-EEB book is very good. I mean, I take all that. But when the GNPA rises, even in wholesale and housing, it scares investors.
Wholesale banking also, we have made a structural change. Earlier, the ACL, which we used to call it as the small enterprises loan, it is similar, nothing but an extended part of the EEB. We have, because we want to make a revamping in the entire structure of this loan, we have actually taken it out from the EEB and put it to the wholesale banking.
Okay, so that's actually MFI, erstwhile MFI.
Let me tell you, without that segment, my wholesale banking NPA today stands at 0.70%, which is less than 1%.
Okay. Got that then. That was what was not obviously evident in the slide, and that's must have scared people. Can we go with the confidence that this 5.8 is the lowest margin, and in Q3 you will be able to improve on it? Net interest margin?
First of all, again, I'm telling you, as just now I have said, that we started the transition period. It was very much necessary because we are a universal bank. We are not a microfin bank.
Yes.
So that transition was very much necessary. And during this transition, we expected there will be a dip. And we have indicated the dip also. If you look at our strategy presentation also and presentation to investors at various forums, we have indicated the dip. But yes, the dip that has happened, we also did not expect. The first thing is that the repo rate upfronting, which we did not expect an upfronting on the repo rate. So
that's right.
Whatever has been declared right from day one of quarter two has been passed on to the borrower. This is the first. Number two is that we have also, as our strategy, as our long-term strategy, we found that we are an outlier in the MCLR because my next bank is almost 200 basis points lower in the MCLR. And so we were just positioning all our loans linked to the repo, where there are opportunities to link to the MCLR. So we did a strategy as a part of strategy. We revamped the MCLR calculation. So that has reduced our MCLR by 200 basis points, and we have passed it to all our home loan borrowers who are linked to that. So that has also affected our rating. Third thing, we have moderated our deposits rate. So savings bank, the moderation has come immediately. But the fixed deposits, which were taken, say, up to March, and mostly they were sitting at 1 year deposits. So that moderation is yet to take place. That is expected a part in this quarter, and the major part will be in the Q4, where you will definitely see an improvement in margin. This is the third. The fourth is definitely the slippages from the EV segment is definitely beyond our expectation. Let me again tell you. So we did not expect that these slippages will continue for this quarter also, but it has happened. But the only green shoots, as I have told you, that SMA 1-2 books are decreasing. So that is definitely a good thing happens. I can definitely say that going forward, has been a challenging quarter. I must repeat, this has been a challenging quarter. We have seen the least, I would say it is one of the third lowest profit Bandhan Bank has given in the history. But I think we will now only be going upwards.
Okay. Now, got that, sir. Even your treasury income should not fall. Every bank saw a fall in treasury income because of the fall in bond prices. So all those should work to your advantage. Can you just give me an idea of what kind of a credit growth you are expecting in the second half? There is a lot of noise in the media about very good, customer sales because of GST. So will your loan growth improve?
Yes. So just to give a little bit of statistics. So if you look at my credit growth, we have a Y2Y growth of 7%. Okay. There was a dip from the March level, YTD dip in the March level, in the June quarter from the March level. That has also improved. Now we have grown almost Q on Q growth of around 5%. So the growth is happening. And if you look at segment wise, my EB book has degrown by 13% YOY.
Yes.
My non-EB book has grown by 24% YOY.
Yes.
So that is a very good green shoot. So I can say, keeping all these things, we will definitely grow by, we are targeting a growth of 11-12% by the year end. And we are hopeful to achieve that. And definitely our deposits growth will be higher than, that was our guidance, that we have not kept any deposit. We said that our deposits growth should be higher than the credit growth, and what we are achieving.
Got that, sir. Got that. All the very best, and let's hope that second half is far better than the first half. Thank you very much for sparing time for us on CNBC TV 18. So that's the word coming in from Bandhan Bank. We wind down on Bazaar with a very, very flat Sensex and Nifty. Hardly any change. The Nifty Bank is showing a little more pressure, but that could also be because the Nifty Bank composition itself is likely to be changed, and we are going to perhaps likely see lower weightage for the likes of HDFC, ICICI, Kotak, the big weighty ones. So maybe that's putting pressure on the Nifty Bank. Wrap up on Bazaar on that note. Chartbusters coming up.